Last and final warning from Big Short, Michael Burry. The Big Short guy is sounding the alarm again. Michael Burry, the hedge fund manager who famously bet against the country's housing market in 2008, recently proclaimed in a since-deleted tweet, "Bond and stock markets depend on a Fed stripped of all credibility." Today we're going to talk all about the last and final warning from Michael Burry. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway in the comments. Now let's get to our topic. Casual investors buying meme stocks and cryptocurrencies are signing up for devastating losses, Michael Burry warned on Thursday. All hype and speculation is doing is drawing in retail before the mother of all crashes, the investor tweeted. When crypto falls from trillions, or meme stocks fall from tens of billions, #Main Street losses will approach the size of countries. Burry added that people's fear of missing out has propelled asset prices to unsustainable levels. #FOMO parabolas don't resolve sideways, he cautioned. The Scion asset management boss also sounded the alarm on crypto fans borrowing recklessly to buy their favorite coins. The problem with #crypto, as in most things, is the leverage, he tweeted. If you don't know how much leverage is in crypto, you don't know anything about crypto. Burry returned to Twitter this week after deleting his profile in April. He previously used the social media platform to issue warnings about Tesla, which he's short, as well as GameStop, Bitcoin, Dogecoin, Robinhood, inflation, and the wider stock market. The Scion chief has attracted a cult following since he anticipated the housing market crash that precipitated the global financial crisis. His billion-dollar bet against the bubble was chronicled in the book and the movie The Big Short. Burry also helped pave the way for the GameStop short squeeze in January, which kicked off the meme stock boom. He bought a stake in the video game retailer in 2019 and wrote several letters to its board, emboldening retail investors to bet on the stock. Burry does more than just talking. As of June 30th, the largest position in his company, Scion Asset Management's portfolio, was a massive $730 million bet against Tesla through the use of put options. Still, Burry isn't down on everything. Let's take a look at 3 companies that he's actually quite bullish about. One of them could be worth purchasing with some of your spare change. Facebook. Burry's biggest long position is an interesting one. Call options on 941,000 shares of Facebook. Call options provide investors with higher upside potential than simply owning the common shares, but they also come with bigger risk. To be sure, Facebook hasn't been a market favorite these days. The company had a massive outage last week and continues to face criticism over whistleblower Frances Haugen's recent testimony. The stock is down about 13% over the last month, but year to date it's returned a decent 23%. Facebook is hands down the largest social media platform in the world, with its family of products having a staggering 3.51 billion monthly active users at the end of June. Financials are also on the rise. In Q2 2021, revenue rose 56% year over year to $29.1 billion, while earnings per share more than doubled from a year ago. Alphabet Inc., Google. As the parent company of Google, Alphabet now commands a market cap of over $1.8 trillion, but Burry believes it can get even bigger. At the end of June, his company had call options on 91,900 shares of Alphabet. The search engine giant crushed Wall Street's expectations in Q2 2021, reporting 62% revenue growth and a net income expansion of 166% from a year ago. In the earnings conference call, Alphabet's CFO, Ruth Porat, said she expects a more muted tailwind to revenues in the third quarter, but that didn't prevent Google shares from trending up. Despite the market's September slump, Alphabet shares have returned a whopping 62% year to date. That's substantially better than the performance of the other $3 trillion tech companies, Apple, Microsoft, and Amazon, during the same period. To be sure, Alphabet now trades at over $2,700 per share, but you can get a piece of the company using a stock trading app that allows you to buy fractions of shares with as much money as you're willing to spend. Walmart. don't think for 1 second that Burry only bets on tech companies. His portfolio is also loaded with calls on 378,600 shares of discount retail giant Walmart. The essential retailer absolutely thrived during the early lockdown stages of the pandemic, and business has only continued to improve as things have opened up. In its fiscal Q2, comparable sales rose 5.2% at Walmart US and 7.7% at Sam's Club. For the entire company, revenue improved 2.4% year over year to $141 billion. Walmart is more than just a brick-and-mortar retail, as it also has a huge online presence. The company said that it's on track to do $75 billion in global e-commerce sales this year. If you're on the fence about jumping into retail, some investing apps will give you a free share of Walmart just for signing up. A fine way to survive the mother of all crashes. Walmart is a recession-proof stock, but how will its shares perform in the mother of all crashes? It's hard to say. In a market collapse, all sectors can get sold off. If you want to invest in something that has little correlation with the ups and downs of the stock market, you might want to consider an overlooked asset, fine art. Investing in fine art by the likes of Banksy and Andy Warhol used to be an option only for the ultra-rich like Burry. But with a new investing platform, you can invest in iconic artworks too, just like Jeff Bezos and Peggy Guggenheim. On average, contemporary artworks appreciate in value by 14% per year, easily topping the average returns of 9.5% you'd see with the S&P 500. Burry has been in the recent news as he also helped pave the way for the GameStop short squeeze in January, which kicked off the meme stock boom. He has been credited for buying a stake in the video game retailer in 2019 and wrote several letters to its board, emboldening retail investors to bet on the stock. Now he changed his tune, saying on Twitter, "All hype and speculation is doing is drawing in retail before the mother of all crashes." The investor tweeted, "When crypto falls from trillions, or meme stocks fall from tens of billions, hashtag Main Street losses will approach the size of countries." He also added, hashtag FOMO parabolas don't resolve sideways. The problem with hashtag crypto, as in most things, is the leverage. If you don't know how much leverage is in crypto, you don't know anything about crypto. So besides leverage, what is making Burry so worried? My guess is back in 2018, he was wearing when BT's 50 MA crossed below the 200 MA, and BTC crashed in spectacular fashion. Well, guess what? Today, the 50 MA and 200 MA is making the cross of death again. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye!